What's going on, you guys? My name is Zach Hardley, and in this video I want to share with you my analysis and comparison of Coursera and Udemy stock. I want to share with you my charts, my spreadsheet, and I'm going to tell you which one I am buying. Here's everything you need to know. Let's go. Okay, so first off, Coursera and Udemy, they have very similar business models. They are both out there and they make money by selling online courses. Now, where they differ is that with Udemy, anybody can upload a course. So for instance, I have courses on Udemy, but I cannot upload my courses to Coursera because Coursera partners with institutions. Now, the reasons that I really like these companies is because they're in this industry, and this industry has some amazing trends that are unfolding right now and over the next few years that I think are really going to accelerate the growth of the companies within the industry. So the trends that I am talking about are, number one, online learning is becoming more widely adopted. We have seen it forced because of COVID that now almost every educational facility can convert to online learning through Zoom or through Google Meets or Hangouts or whatever it might be. That capability is now there, and I think COVID has proven that while it might not be the best situation, especially if you live close to a school, it can work, it does work, and it can be implemented in a variety of different situations. Number two is that more people are gaining access to the internet. We have seen the lineup of people waiting to receive SpaceX's Starlink and Elon Musk's new internet system, and I think that more and more people around the globe are going to get better and better internet, and that is going to give all of them access to both Coursera and Udemy, and I think those people are going to want access to it because it allows them to build skills that they can then go out and get a higher paying job with. So I think this could be an ultimate enabler of people getting higher paying jobs around the world. And thirdly, those high paying jobs require technical skills. If your skill is customer service, unfortunately, you're probably not going to make $100,000 or $200,000 a year. But if you go out and you spend 8 months learning how to code and do a full stack development on a mobile application, I guarantee that you can go out and make $100,000 or $200,000 a year, and you can learn all of those skills on both Skillshare and Udemy. So I think there's a huge advantage there, and that is why I like the industry, and both of these companies are taking advantage of all of these industry trends. Now, here are the websites if you want to go check them out, udemy.com and coursera.org. Here's what the Udemy website looks like, and as you can see, I've got my course right here. It's got 4.6 stars and 559 reviews. It only costs $17, so definitely check it out if you're interested. But you can basically go on here and buy courses from anybody in almost any topic, and you can learn just about any new skill. It's absolutely amazing, the wealth of resources and the wealth of knowledge that is on these platforms. So this is what Udemy looks like, and then Coursera is a little bit different. They partner with universities and companies like Google and IBM and Duke and Illinois and Stanford, and they put together courses that are basically like online university. They give you a certificate at the end of it. You can put it on your resume, and hopefully you can go out and get a job based on the new skills that you have. And so both of them are excellent platforms, really great for pretty much everybody. And these are the two companies that I am looking at and kind of evaluating in order to get invested in this online course kind of industry. Now, when it comes to the stock chart, neither of these companies has done very well since the IPO. You can see Coursera got listed here back in early 2020. They rose to a high of $62.53, and they are currently trading at a price of $28.63, just recently bouncing off this $25 price level. We will see if that price level holds up as support or if the price continues to fall. But as of right now, we are still in a bearish trend and in a bearish pattern, which is a little bit unfortunate because I have lost a little bit of money getting stopped out of this stock. But I am going to be patient. I like the company long term, and I'm going to tell you about it why in just 1 second. But here's the Coursera chart. I think we might have support at $25. We'll have to see if that holds up. And when it comes to Udemy, this company just listed more recently, so back in November, so literally just kind of 2 months ago. They listed it at around $29, I want to say was the IPO price, and now they're currently trading at $22.04. It looks like we may have some support here at $20, but again, we are also in a fairly bearish trend. Now, luckily, I don't own either of these stocks right now, so personally I actually hope they both trade a whole lot lower over the next 1 or 2 weeks, and then I will buy in. But as of right now, I am definitely looking at both of these stocks for an entry point. I don't have a position in them yet, but here now I want to show you which one I'm going to buy and why. So here's the spreadsheet that I use to kind of analyze everything between these two companies. And on the left-hand side here, basically the metrics that I'm using to evaluate them. These are the different ratios and things that I personally think are important to these companies in this industry. And I want to see which one has better ratios and better metrics and better performance so that I know what I am investing in and I can make a better decision of which one to give my money to. So here are the metrics on the left, and then we've got Udemy and Coursera. Coursera is on the right side here. And so just going to walk you through this line by line so that you can understand my mentality and how I think about this. At first glance here, the market cap, meaning how much are these full companies worth if you multiply the price per share times the number of shares. Udemy is worth just under $3 billion. Coursera is worth about $3.7 billion. So Coursera is larger than Udemy by, let's just call it 25, maybe 30% here, not a drastic margin. However, the revenue in the last quarter, so the quarter that was just reported on, Udemy actually had higher sales than Coursera did. So they're worth less with higher sales in the last quarter. Now, the reason that I think they're worth less is because their same quarter over quarter growth rate is lower than Coursera, and their growth rate just in general is lower than Coursera. Overall, Udemy is growing at roughly 15% per year, and Coursera is growing at roughly 33% per year, which means in just a matter of a short period of time, Coursera should be bringing in more revenue than Udemy, and I think that they're getting a higher valuation because of that growth rate compared to Udemy. Now, when you compare the price to sales ratio, this compares what does the stock cost versus how much earnings is each share generating, or what is the market cap divided by the earnings of the company. Either of those ratios will give you the same number. Okay, now the next metric here is price to sales ratio, and this is basically what is the market cap divided by the revenue that the company is bringing in over the last 12 months. And so Udemy has a lower price to sales ratio, which means that it's selling at a better valuation with regards to this specific metric. It means that Coursera is a little bit more expensive for the amount of sales that it is bringing in right now. And that would also make sense though, because they have a higher growth rate. So this metric, although Udemy wins it, it kind of makes sense because you're paying for it with a higher growth rate in Coursera. So that's how I think about that. Now, when it comes to gross profit, this is basically revenue minus the cost of goods sold, and Coursera actually has a 61.6% gross profit margin, whereas Udemy is only about 55%. So Coursera has slightly healthier margins. However, both of these companies are losing a significant amount of money. So 11 million for Udemy and 32 million for Coursera. So Udemy is technically losing less money, but neither of these companies are doing well. They're both losing a significant amount of money, and it doesn't look great if you're measuring it just by the income statement right now. However, when you look at the balance sheet, it tells a significantly different story because Coursera has significantly more assets by a factor of about 3x. They also have less liabilities, which is very, very nice to see, and it actually surprised me. And when you compare their net assets, which is basically just total assets minus total liabilities, you're left with $756 million for Coursera and only $7 million for Udemy. And when you look at the current ratio, which is all of the current assets divided by the current liabilities, you get a 0.85 ratio for Udemy, which is not good. Anything below 1 is a little bit concerning and kind of a red flag, whereas with Coursera, the ratio is 4.9. So yes, the income statements kind of showed a mixed and kind of a balanced valuation here, but when it comes to the balance sheet, Coursera has a much, much healthier and much, much nicer balance sheet than Udemy does. And so that was a significant factor here. They also have a higher float. Now, float basically means how many shares are outstanding and can be traded right now that are liquid in the market and are not subject to any lockup periods. And basically, Coursera has a much higher float, which means it's going to take a whole lot more buying and selling in order for that price to move. Whereas Udemy has a smaller float of only 15 million shares, which means if there's a big buyer or a big seller or some big news that comes out, the price is probably going to be a little bit more volatile with Udemy compared to Coursera. And what I found interesting about this is that the percentage held by institutions in Udemy was only 40%, whereas Coursera it was 78.5%, or nearly twice as much, which means the institutional investors that are really doing the hard due diligence in comparing these companies, the majority of them, or at least a larger amount of them, have gone with Coursera as opposed to Udemy. And we know that because they're roughly the same size market cap, but Coursera has 2 times the percentage held by institutions. And so that was really, really interesting. Or at least I found that to be an interesting kind of information point. You never want to trade off that, and that's never a clear signal. But I found that really, really interesting that these are the 2 major companies in the industry, and this was a large difference here of percentage held by institutions. It also makes me feel a little bit safer. They have a much cleaner balance sheet, and they have healthier gross profit margins, and they have higher growth rates. So for me, Coursera is really the kind of winner here when I compare these 2 companies. And so my strategy here is to buy Coursera. I plan to be patient and wait for confirmation of a trend change. I have already bought into it once and got stopped out with a stop loss, and it's a good thing I did because the prices continue to trade lower. I now have an opportunity to buy back in at a lower price, but I do like the company. I really want to hold it long term. I want to add it to my long-term portfolio, and I really, really like the business model and what they're doing. So I plan to add Coursera to my portfolio. I'm probably going to leave Udemy on the sidelines, but we'll have to see how things go. Now, if you are interested in learning a little bit more about how to do analysis like this and compare 2 stocks and look at the price charts, then definitely consider signing up for my stock market fundamentals course. It is completely free, and you get unlimited access for 2 weeks when you sign up with the link down below, and it's only 10 hours long. So if you can do the entire course in under 2 weeks, cancel it and you won't pay a single penny for it. There's over 9,000 students that have gone through the course, over 340 reviews, and 1.4 million minutes of watch time. It's hosted on Skillshare. The link is in the description to this video. I promise you, it'll be well worth your time. It'll be the best free resource that you can find online. Now, make sure you do your own due diligence, make sure you do your own research, and if you got any value out of this video, remember to click that like and subscribe button. I sincerely appreciate it, and we will see you guys in the next video. Good luck trading, good luck investing, and we'll talk to you soon.